Now now we're going to close up for the day. And I'm going to invite three gentlemen up on the stage, Gonzalo, Pozo, Ben, Neve, and Hanna. Come up. Please sit under your photo, is what I've been asked to say by Lola. Okay? So there we go. Now, this is where you see DALL-E at work, right?
Yeah.
You see reality,
Yeah.
and you see the images. Yeah, that's the worst. Okay. Anyway, so what I thought I would do with these three gentlemen is to take a bit of a reflection over the last few days. And you might say, well, why these three? Well, first of all, I've known each of them for a very long time. I know 10, 15 years, if not longer. Each one of them has been an operator in the industry. You know, for example, Joe's most recently been the CEO of the PropTech group. Gonzalo was the CEO of the Matula group. And Ben had, well, actually Dot Property originally, if not before that, a bunch of other businesses. But they're also investors in the segment as well. So part of what they've got to do as an investor is to think to the future, okay? Because you're putting your money not for a return in the next weeks or months, but it's actually 3, 5, 10 years out. So I thought what would be interesting is to have a conversation with each of you, just progressing around sort of three areas. One is, let's start by going backwards and looking to today. So we go back, we're sitting in this room 5, 6 years ago, call it 2017 or so. What's been the biggest surprise, the biggest jump? So think about that question first. The next is, what have been your biggest takeaways from the 2 days? And then the third is, where you're investing, what are the things that are attractive to you and why? So three, I think, super interesting questions that you now have a couple of seconds to think about, okay, as we go through. So let's start with you, Joe. I mean, you were here probably 2017, maybe, 2016. Yep. When you sort of reflect back what we were talking about then and what's happened now, what's been the biggest surprise in that whole jump in time?
So I guess three things. First of all, the biggest surprise has been the evolution of closer to transaction and how innovative, particularly the emerging markets, have been to finding ways to get us closer to transaction. In part due to necessity, right? Because portals weren't working as well. You need to find a way. I think Sean's comment of that's the end goal, just make mistakes and learn, is probably the key. So we fast forward to today, we see the rise of the tech-enabled broker, we see end-to-end transactional platforms that are still in the early stages but have moved, and it's something that we spoke about a lot. The second surprise, well, not a surprise, was COVID, right? And the fact that COVID led to an acceleration of the adoption of technology, not only in PropTech, but probably more importantly in the broader industry. I mean, my mum knows what a QR code is now. She can order things. So consumers are a lot more digital, and that's forced the real estate industry to really follow up.
Yep. Ben, from your perspective?
The biggest surprise
Yes.
so far? Well, apart from Dot Property actually acquiring Fazwaz, which was quite a surprise. I think the biggest surprise for me has been the fact that the real estate portals, the really successful large ones, haven't adopted their strategies in non-emerging markets in Australia and the UK. And while the other newer businesses and the newer business models have come, they seem to be, the standard real estate portal seems to be far less affected by this dive in share prices. So it means that the traditional model still works in forward-looking markets, if you like, or advanced markets. However, like Joe said, the emergence of the big players here in Thailand, and we got the three tech-enabled brokerages that are becoming the portals now, with Fazwaz taking the lead, and the fact that they're really taking over the market and becoming far more profitable earlier than probably a portal would have been in those markets. So, yeah, I think there's a long way to catch up for the emerging markets into the Western markets, but I'm surprised that there hasn't been a big winner in the iBuyer space, or if Zillow can't do it, who can? And there's lots of these other things that have come and gone, but the traditionals have remained.
Yeah, I think just on that point, I think the biggest surprise for me was just how gullible the US market was to the US investment market was to put a whole bunch of money into Zillow. I mean, you literally had the CEO, replaced and then replaced by the previous CEO coming back, who basically says, well, now going to the iBuyer model, the share price doubles, triples, and goes sort of super crazy. But anyone looking at the economics have gone, come on, this just doesn't add up.
Yeah.
Even on a zero interest rate environment, it still doesn't add up. And eventually everyone woke up and went, yeah, you're right, it doesn't. Then it's like, once again, they go down. So Gonzalo, from your perspective, what?
Probably the same. I mean, I remember in 2017, not all, but 80% of the conversation was about getting closer to the transaction and how that was going to change and how portals could, not only portals, how we could all, different strategies how to get there. And but I have to say that I actually agree with Sean when he says that the fundamentals of buying a house or selling a house, whatever the transaction, haven't changed in 30 years, at least since I've been in this. So at the end of the day, what happens is what Zillow trying to, the iBuy, etc. is you become a franchise. You become what you're becoming basically is with the same costs of a realtor, of a big franchise, etc. So why? Because it's not buying Amazon. It's not buying in Amazon. It's basically so. Probably that is my biggest surprise, no? And okay. I thought there was going to be. I mean, there's a lot of people are doing it, and then my other big surprise is how the number one portals in established markets, etc. I just don't care. They don't care. They're making big, profit margins, and they just don't. They're not thinking, and they don't have to. That's actually a surprise for me.
The lack of innovation.
Lack of innovation.
And the business unit. And I think when I was reflecting about this before, and I was reflecting on some of the presentations, whether it's from, if you look at the large established classifieds players, so they're getting paid for advertising, the model hasn't fundamentally changed. If you think, going back probably 20 years.
Yeah.
And I think even, maybe it was Ed talking about before about the search, and I'll take Rightmove as an example. The way you search on Rightmove has this extra step in it, right? I don't know if you've searched on Rightmove, and that extra step has been there for 25 years.
Yep.
And they've never taken it out. But then everyone's gone, okay, I'll do the extra step. And the world just keeps moving on, and they keep printing money. So I think one of the interesting reflections around the established market players is the lack of innovation. I think
Yes.
you're absolutely right on that. And I think the other reflection is that a lot of the innovation is now coming from the emerging markets, where they've all woken up and gone, oh, I actually can't make money from classifieds. It's just too hard. And those models sort of got blown out of the water just by the reality of agents not paying, or high churn, or the yields being so small.
Yep.
When you think about the conference and the conversations over the last couple of days, what would be your 2 or 3 takeaway innovative ideas or thoughts around it? And it's always easy if I go you first and Gonzalo goes, I agree, right? So let's start at the other end.
Okay, so clearly AI, I mean, as such, I think it was yesterday, they have opened the API for developers. So any developers here, if I were you, I would start, playing around with it, with ChatGPT, I mean, OpenAI. And so that's cool.
By opening for developers, as you can start to get into...
You can start through an API, you can start sending massive, like, for example, descriptions, and ask for different tones, and try to understand if we've seen here that, portals, we have enough technology now to know who are we serving to, our customers. So if it's in the 20s, in the 30s, in the 40s, use different tones. It's all about that. It's all about monetization and creating leads. So, and now it's open. You have an API that is open, and you can send, and you'll get text back.
So it's all about mass processing.
Mass processing. then the other two things for me is blockchain and I do like those because at the end, like for example, in the European Union, we have 2 years to have like what is called the digital passport. I think that's going to change a lot of in the industry. Digital passport meaning that all the process for example, as applying for a mortgage is going to be done on the fly. I mean, it's super easy, and although they have to, thanks to blockchain, now we can have a digital passport that is secure, no? Basically, and my probably the third thing what we haven't talked about here is that everything that we know, I think, is going to change due to quantum computing. I mean, once quantum computing runs, I mean, which is probably in the next 5 to 10 years, then we'll see a completely change of everything.
How will that change? What will quantum computing bring?
Well, for example, for AI, OpenAI today, what has a relatively problem on over demand, no? So imagine all these operations that we're talking about, all the AI could be processed like in milliseconds. I mean, everything. But not only that, it comes also with some problems, like security problems, because today we don't have any encrypted, how do you call it? Keys that can survive to quantum computing. So it comes with problems, but I think it's going to be a complete change in how we see the artificial intelligence, how we see but again, it's like tokenization as well. For example, NFTs. Not NFTs in the US, for example, or Canada with ownership, but with smart contracts, lease contracts that I can create an NFT and I can use that as a currency, things like that. I think
the company that you're probably thinking about is Nash 21.
Nash 21, yeah.
If you want to look at an interesting company, Nash 21, who's basically tokenizing rental contracts. So, because a 12-month rental contract, day one, has a lot of value in it, and they're basically allowing those rental contracts to be traded so that you can then bring forward.
Yep.
And there's a whole bunch of other staking and a whole bunch of other stuff that they've built into that platform. Super interesting, very early stage.
Very early stage.
But I think it's just giving you a glimpse into what people can do with this sort of technology. Ben, what about you? What are the sort of 2 or 3 key takeaways, the ahas of the conference?
Well, I think what I've been surprised with was still the massive opportunity in the emerging or very early stage markets. Mark Nosworthy about Bangladesh and the fact that there wasn't even a real estate agency over there. And he's actually building a marketplace that's building a whole real estate ecosystem over there, and the growth prospects in that sort of space is so massive, and I wasn't aware there were that sort of growth opportunities still remaining in what's now quite a older industry, a mature industry. So that was surprising in Sean and the opportunities over there in South America as well. So I'm rather than going on about all the tech that is evolving, the traditional going into the new markets which are evolving, I think is creating, it could be really interesting moving forward.
And Joe?
Yeah, for me, very, very similar to the other guys, obviously, but I think the innovation that's incumbent on what it's required for the emerging markets to see that level of growth in such a short amount of time has been an outstanding theme for me. It's something that I'll take away. BProp is a really good example. It's, they're doing the settlements as well. It's crazy that, you in an emerging market, through technology, you can dictate the market and create structure in a market that otherwise doesn't exist. So all that innovation is coming out of emerging markets, and at some point they'll probably be adopted by mature markets, but you get to test them in the emerging markets. From an AI and chat GDP type point of view, I think we're seeing a glimpse into the future, particularly around things that we can do today. As Gonzalo mentioned, content creation at scale, variations, multiple variations, tones, happening in an instant. And it's interesting to see how that will be adopted in the near future.
Yeah, I do think in not Indonesia, Bangladesh is an interesting example of where it's almost like if you didn't have to start from somewhere, but you could have it's a totally clean slate, and you were to sit down and say, well, everything I know about technology today, everything I know about how government operates, etc., how would you create the property transaction process,
Yeah.
right?
Is the example, it's like, for example, when we talk about a country that didn't have telephone lines. Well, you're not going to go through telephone lines to the DSL or whatever,
No.
and then to the fiber, and then to,
No,
so
you
5G.
jump. Yep.
You just go there and you put 5G. So Bangladesh is an example of where you blend everything together. You can become a developer, a realtor, an agent, a portal, everything, because
And probably the government property
Yeah,
department, right?
yeah, well,
Because they'll become reliant on you for all the data of transactions to pay their taxes and so on.
And you can test the new technology. You know, you
Yeah.
can implement without breaking anything because there's nothing to break.
there's-
So,
yes.
yeah, so
No
you
one to
can-
piss off in the process.
Exactly.
There's a way to think about that. So then let's then think about going forward. And by the way, feel free to ask questions if you've got any ideas or questions or thoughts you want to contribute to this conversation. Then it's about, well, you guys are investors, you've got funds, there's Tadium, you know, you've exited from PropTech Group, a couple of dollars, and you've got Net Ventures, right? So the question is, when you think about investing now, what are the themes that you're looking at? Is it, yeah, I'm going to invest in a classifieds property site in an emerging market? Probably not, right? So how do you think about it? But maybe 5 or 6 years ago, you would have thought about it. Okay? The world has changed. So what are some of the things that you would think? Ben, why don't you go first? Because
Well,
Your turn.
actually, probably I would, because I'm just about to. So that's our next investment is a property portal in an emerging market. But yeah, so I don't think your investment thesis changes at all. You know, you're still looking, like Frederick said, you're looking for innovation, you're looking at teams, you're looking at total addressable market, looking for fast growth, a 5 to 7 year plan. With a significant exit at the end, if it all works out and we execute well. So yeah, I'm not adverse to investing in new tech, but I prefer proven in Western markets. Taking it to new markets is our preference.
let's break that actually. I'm going to break that question into
Yeah.
two: established markets and emerging markets. So I understand you'd look at the established markets, see what the opportunities are, and bring them still. So it's still the same sort of
Yeah.
concept of doing that. What about you, Joe?
I think for me it's evolved a little bit. I think in mature markets it's all about consolidation. I think that the fact that we've seen an increase in fragmentation due to the sheer rise of PropTechs. I mean, we've proven that thesis to be true with PropTech Group. If you can bring these companies together, create an interconnected ecosystem of interconnected pure play PropTechs, then there's significant value. So in terms of my investment thesis, in mature markets will be less around innovation and more around consolidation, because I think that's important. In terms of the innovation side, you know, I still think it's worth having a crack at some of the innovative things
Yeah.
you can do with blockchain. I think there's things that we can spin off from ChatGPT or type generative AI tools that are worth investing in. And the third would be sustainability, as Frederick mentioned. I mean, clearly that this is a topical issue that's not going away. The next generation of buyers are very concerned about sustainability, and it's not just Gen Y and beyond. It's kind of it's an aging population already. So those themes I think will resonate through.
Okay. From your perspective, Gonzalo.
Yeah, probably we'll have to say that completely different. I mean, it has changed a little bit since we started, like in first fund in 2010 or something like that, or before. But now I would say in completely different in emerging markets than established markets for obvious reasons. I like innovation. I like when innovation meets needs, real needs, and I think there's still what we'll be talking about it, like with AI, etc. I think there is a space there to invest. It's going to be a long run, but I would like actually investing in some of those, and but also I like things like an established markets as well, like sellers leads, I mean very specific stuff that can, you know, that I think there's still room to crack the code.
So on service.
Can you bring up the questions, please? I'll give. I think the way I think about this is I think the interesting plays in the emerging markets are to see if you can basically do what Life was trying to do, put together the lead generator with the transaction engine. And how can you do that market by market?
Yeah.
And I think if you can craft an outcome where you're acquiring two, putting them together, and you're doing it without the inbuilt fear of disrupting the current business. So that I think is a very interesting financial play in those markets. And I think in the established markets, the market is so large now that you can find the concept of a niche being small is bullshit, right? It actually can be a hundreds of millions, if not billions of dollars in a niche. And I think what's going to happen in those established markets, and it's like that Domi
in Berlin is doing. I mean, but the opportunity is huge.
Yes.
Again, it's a niche, but it's huge.
Yeah, now this is a business that's focusing on
It's a digital passport.
A tenant passport.
Yeah, it's a tenant passport.
So you as a tenant, you're basically creating a digital passport, and it's not just to get the today's transaction, but it's working on the theory that you're probably going to rent for a long period of time, as Michael was talking about, and you're going to go through multiple houses. So if you have the tenant passport, you build up on that passport your history of goodness, paying on time, etc., and your history of not so goodness. And that then becomes the non-negotiable mechanism by which you can then, a landlord says yay or nay to business.
And it can be used to help you move from renting to owning, right? Because it's got all the historical data.
Yes.
Simon, as well, in the UK, places like that, it's still 6 months to transact on a property.
Yep.
That legal system is broken, and I think blockchain and some of this next technology and the passports can speed up all that process. So there's still loads of opportunity in these markets. It's just figuring out which ones to go with what tech.
Okay. Now, what do you think is the path? What do you think the path is for traditional portals operating in emerging markets such as Property Guru and 99Co? How do they scale versus the tech brokers? Or maybe another way to ask the question is, should they merge as quick as possible so they can capture from the transaction side, or have they got a path in those markets by themselves?
Well, my view is buy merge as soon as you can. That'd be my guess.
My business is slightly different because Ed was saying today, that how, and most of these portals, what they do is when they enter into another market, they just acquire a company. But it all depends if you have a really unique. So for example, Idealista hasn't done that. Idealista has started from zero, from scratch in Portugal and in Italy, and they've done very well. So, but Idealista has a slightly unique, proposition for the, in terms of whatever you want to say, But it depends on that, I think.
Yeah. But it's hard to start from scratch nowadays.
Yeah.
It is, but it's doable.
Yeah, I think from an investor perspective, there are enough entrepreneurs out there who have sweated for about 2 to 3 years to prove or disprove a model that you can find some very good investments that can be accelerated, which sort of is interesting because the question says, what stages do you invest in? Seed, angel, early, A, B, C.
So we're very early. We're at inception. So we're venture builders rather than a VC company. So we're day one.
Okay.
Well, probably agnostic on that.
You don't mind as long as it's a good opportunity.
Yes.
Okay.
Yeah, I'd say agnostic too. I mean, even as early as a term that I know you love, Simon, ideation.
Yeah.
Really, down from innovation through all the way through to growth.
Okay. Given the huge opportunity in emerging markets and the current investment environment, are there any tips for raising capital?
Yeah.
Have a really good story?
Yes,
And track record.
Well, I think that has also changed from the last, probably the last time from 3-4 years ago, everything, I think the market went a little bit crazy. Now valuations are a little bit more down to the floor, more realistic. Mm-hmm. So if you have to raise money, just have a good story to tell and just, get as much as you can would be my advice. Raise as much as you can.
I think at the moment you're seeing everyone needs at least a roadmap to profitability. It's not just a never-ending pot, so you can't go out there and just raise and spend and guess.
Yeah, and there's enough evidence of the roadmap working. FDV's got good examples of how you can grow from emerging markets very quickly. We've seen examples here today, so yeah, I agree. Get money from wherever you can, as much as you can, as big as you can.
And less hockey sticks, please.
Yeah.
Way too many of them.
Yeah.
Do you reckon will all residential transactions be fully digital and automated in X years? X, who knows what X is, right? Is it 5, 10, 15, 20, 30 years? If so, what is X?
I mean, my view on this is that there's still a need for a human interaction. I think it was Malcolm that said it yesterday, that those points can be minimised, but there's still those points that are required. And it's such a, to Gonzalo's point, you can't go to Amazon. It's such a different buyer journey that you want to trust that there's a human involved. So in my view, it's probably not in my lifetime.
Agree, totally agree.
Me too.
But it depends which part of the transaction. Rentals, absolutely.
Absolutely.
rentals,
So
yes.
rentals,
And,
absolutely. Yes.
and off plan.
Yep.
And investment.
Yeah.
Investment, off-plan, rental. So we're really talking about secondary transactions.
Yep.
Okay, at the end of the day. That's the hardest one to really break the back of. And I think the reality with that is that because it's an emotionally permanent transaction, okay, the majority of people are moving into their prime residence, it's going to be very hard for people to get super comfortable with everything being digital, except probably at the point where they're happy to let themselves in, show themselves around.
I mean,
digital
if you believe in
keypads.
the trends, like for example, we've been listening these 2 days, no, like the kids today, they don't want to own houses, or they will not want to own. Yeah, but the houses they're gonna have to have a ownership. That's for sure. So it's going to be investment because it has to be owned by someone, and someone has to build them. So it's irrelevant, I think. I totally agree. It's more the secondary market is what it's probably going to always be the same, but not in terms of rentals, in terms of agree.
Okay. Last couple of questions. Better profitable with slow growth to keep the burn down, or unprofitable with fast growth?
Depends.
And the answer is, I think yes and yes.
Yes and yes.
Because it depends on the stage.
Yeah.
Because if you think about it, it depends on where you are. If you're a startup, you have to go fast, hard and fast, even if you're losing money, to prove or disprove the thesis. To get the MVP working or not working, right? Once you've got it, then you've got to have, then you can either slow down and think because it didn't work, or you double down, accelerate, and go. So the answer is yes and yes.
Yeah. No, agreed.
I think that. And the last one, just to because I know Javier would like to have the last say. Okay, do you think the iBuy model is not viable at all, or could actually be a good disruptive model if applied correctly?
The same as Joe was saying. I mean, parts of the process can be done more efficiently, but I don't see the iModel serving like Amazon.
Yep.
My view is if Zillow can do it, then no one can, because the amount that they poured into that with their knowledge, their tech, their experience, and their people, I just say if they can't do it, no man can.
Yeah. So my view is that I think Malcolm touched on this yesterday, and there's a company in Australia we've been looking at for that bridging, iBuy bridging, which I think is an interesting spin on it, to say, well, to get you into a new home, we're going to give you a guaranteed price and actually buy your home so that you can go buy the next one. But it's a short-term defined period, so you're not as exposed as Zillow was, having all that debt on your book, on your balance sheet.
Yeah, I think you've got to have pretty big balls to do it the way you have to do it, because it has to be a scale game. The pluses of scale is that you can make a few mistakes along the way. The minuses of scale is you've got to put a big bet on. And I think the real fundamental issue is it's not what you can control, it's what you can't control.
Yeah.
And what you can't control is consumer sentiment, you can't control inflation rates, you can't control external factors like COVID or any other disruption that's occurring in the market. US election, suddenly bang, that can be one election, one day of voting can totally change attitudes in what's happening. So I think it's a nice in concept. Someone buys it fast. Amazingly, they're going to make a profit that you couldn't make out of it by putting liquor paint on it and do whatever, and they can hopefully do that at a cheaper price. But there's reality, that unless there is the underlying demand, which only really sort of has a chance of working in a hyper-aggressive market, which for whatever reason someone has to sell, and then that's not a scale game. Distressed assets. Gentlemen, thank you very much. It's been fun chatting with you. It's been fun seeing everyone here. And I thank you for sharing your thoughts.
Thank you.
And I'll get you guys back up on stage in 5 years' time.